Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Wednesday, March 18, 2009. Today's FOMC announcement surprised markets as the Fed said that it would expand its purchase of mortgage-backed securities by $750 billion and has decided to purchase $300 billion of long-term US Treasuries over the next 6 months. The news boosted equities as it implies the Fed is trying to lower rates on many corporate, mortgage, and consumer loans linked to benchmark government debt. The reaction to the Fed announcement in the currency market was very volatile as it came as a surprise. The euro-dollar pair surged 350 pips following the release, extending gains that started overnight when the pair was below the 1.3050 level. The euro set an intraday high near 1.35, the highest the pair has been in the last 2 months. The Greenback suffered as the expansion of these Fed programs will add extra debt to the Fed's balance sheet, which debases the value of the Greenback. The pound-dollar pair reversed overnight losses and broke out of its recent downward channel to set a new 2-week high near 1.4280. That amounted to a 300 pip move following the Fed announcement and a 400 pip gain from the session's low. The pound was pressured overnight by a very weak employment report. The UK claiming count showed that the UK economy shed 138.4 thousand jobs in February, bringing the total number of people unemployed to 1.39 million. The job loss figure is the largest since at least 1971 and adds pressure on the UK economy, which continues its downward spiral. Forecasts had called for a decline of 84.5 thousand. The unemployment rate, which lags the claimant count by 1 month, rose to 6.5%. Getting back to our market highlights, the dollar-yen pair slid 200 pips in the wake of the Fed announcement, testing support at 95.70. That support level matched the low we saw on March 12th. The Greenback saw a slight counter move, and the 95.70 level may shape up to be an important one for the rest of the week. The US dollar-Canadian dollar pair, which has established a downtrend the past 8 sessions, fell about 250 pips following the Fed announcement, breaking through recent support levels. The pair breached the downward sloping line of support near 1.25, with the next important support level at the 1.24 area. Now that we've taken a look at some key market movements as a result of the Fed decision, let's take a look at some other fundamental news that came out beforehand. U.S. consumer prices increased for a second straight month to begin the year, with consumer prices up 0.4% on the month. That was a bigger than expected increase. What today's figure does is put away some of the fears of a deflationary spiral in the U.S. economy. On the year, prices were up 0.2%, a rebound compared to January, but far below the 2% target that most Fed officials think is consistent with their dual mandate of price stability and maximum employment. Also in the U.S., current account deficit shrank considerably in the fourth quarter, a result of a smaller trade gap. The current account, in addition to trade, takes into consideration transfer payments and investment income. Such a large deficit, though smaller than the $181 billion shortfall seen in the third quarter, requires the U.S. to attract capital from abroad in order to finance it. Recently, China expressed concern over its holding of US Treasuries, which make up a large portion of what the U.S. sends abroad to finance its deficit. After today's exciting and volatile session, let's see what releases we can look forward to tonight and overnight. Tonight, Japan will post its All-Industrial Activity Index, Australia will post housing starts for the fourth quarter. Overnight, Switzerland posts its trade balance, the Eurozone releases its industrial production, and the UK unveils government borrowing figures. Tomorrow, Canada releases its consumer price data and data on foreign purchases of Canadian securities. The U.S., meanwhile, will post its weekly jobless claims, the Philly Fed Index, and its leading indicator. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.